What if I told you I got paid to put on a trade and then got paid again to take it off? That's not a typo. On this one trade, money hit my account when I opened it, and a bigger check hit my account when I closed it out the very next trading day. I'm going to show you the entire thing, the real fills, the real credits, straight from my brokerage statement. You'll see how I got paid to get in, how I got paid to get out, and how this exact structure wins, whether the market goes up or down, because my whole job is simple: teach you to win when you're right, win when you're wrong, and never gamble. And stick around to the very end. I'll show you a major tax advantage on this exact trade that most option traders have no idea exists. You don't want to miss it. Here's the proof. Look at the top. You can see that we entered this trade and we received a credit, a small credit, only $5, but we still received a credit. Here's exactly what you're getting. The exact XSP trade, how I got paid on the way in and paid again on the way out. At the very end, you'll receive the tax edge on this trade that most traders completely miss. First, what is this thing? XSP is just the S&P 500 index at 1/10 the size. Think of it as the SPY's little sibling, but it's very comparable to the SPY. I put this trade on with XSP trading at around $758. My directional lean was slightly bullish, and I thought that the market would either tread water or go up slightly. And then also, we're going to discuss this trade with SPY later on. The setup: I got paid to make this trade. I bought the 758 call. I sold the 761 call. This is a call debit spread. My bullish bet was set up to $3 wide, which means a $300 profit for every one of these that I put on. Then I financed it by selling 3 of the 732 put options. The premium pays for the spread. I only sell puts where I'd love to own it. The result: the whole order opened for a credit. I got paid $5 just to put this trade on. Most people pay to place a trade like this, especially when they buy call options, but I got paid to place mine. It's like walking into a casino and the casino pays you to sit down at the table. If XSP goes up, my call spread profits, and I keep that opening credit no matter what. That's the start of what I mean when I say that we win both ways. Let me show you the actual trade order. Look at where it says limit credit 5 cents. I got paid $5 just to put this trade on. Quick reminder before the next part: stay till the end and I'll show you the tax advantage on this trade that most traders never use. But here's where it gets good. The very next trading day, I closed this trade and collected another credit. Real talk, let me be precise. This is not a risk-defined trade. Those 3 puts are naked. I want you to know that. I sell them on purpose, but only at a price where I'd be thrilled to own it. Now, XSP is cash settled, so there's no assignment here, which is exactly why I'll show you the SPY version in a minute. Here's the closing trade. I closed the call spread the very next day and picked up a credit of $210. Let's add it up. Open the trade, picked up $5. Closed the trade the very next day, picked up $210. The 3 puts, they're set to expire worthless. And because I'm recording this on June 10th, I can tell you in fact that those 3 put options did expire worthless. The total is roughly a $215 credit that I got paid both ways. Why do I say paid both ways? Because we received a credit when we opened the whole trade. Then we received another credit when we closed the call debit spread. That second one is me cashing out the gains on the call options. 2 credits over 2 days, 2 trades, because we made 1 trade at the opening and then another one the next day. That's the structure doing the work while also substantially reducing your risk. If you want to actually own the shares, then you can use SPY. You can run the same exact strikes on SPY instead of XSP. Now, if it drops to your strike price, you're not going to be cash settled. You get assigned a great position at a discount. That's how I was handed Google near $150. It's a gift, not a loss. If the underlying goes up, then the spread profits. If it goes down, you own it at a major discount. That's winning both ways. One more thing, this was just 1 tranche. Everything you just saw was a 1 lot. Want more? You can run 3, 5, even 10 of these. The math scales right up. but be honest about the risk. The more risk equals the more naked puts. Only scale into names and levels you genuinely want to own at the strike price that you sell. Why getting paid to enter is the whole edge. Most traders pay a debit to buy a call option, so they need to be right on the direction and the timing. I open for a credit, so time passing and a flat market, they both work for me. I don't need to predict. I need the best structure. The trade structure is the difference, and it's also your major advantage. The number one mistake that ruins this trade. This only works if you genuinely want to own the stock at your put strike. Selling puts on a company that you don't want to own equals gambling for premium. The discipline is the edge. Pick the company first, the strike second. Is this too good to be true? The risk is that a stock that craters far below your put strike. Then you own it lower than you wanted. A real loss, not a bargain. That's why I only sell puts on companies I'd be happy to hold for years. No trade is risk-free. This one just pays me to take a risk I already wanted, while also allowing me to participate in the upside. Here's the real lesson. I had a directional lean, but the structure didn't need me to be right. Up, down, or sideways, the trade was built to win. Win when you're right, win when you're wrong, never gamble. Okay, here's what I promised you at the start. The trade was an XSP. An XSP is what we call a 1256 contract. That changes how it's taxed. Roughly 60% of the trade is treated as long-term capital gains and 40% as short-term capital gains, no matter how long you actually held it. I was in this trade for 1 day. That's a real edge most option traders completely miss. I'm not your accountant, and this isn't tax advice. Talk to a professional. But that is the difference between trading like the house and gambling, where you're able to save a substantial amount of money on your taxes by using XSP. Who's telling you this? I'm a former Wall Street investment banker, graduated from an Ivy League university, and every trade is backed by real verified statements. I post trades exactly like this for my members in real time. Want in? If you want to follow my trades, there's a 14-day trial. Link is in the description. If you want to look at my trading statements, you can check out this video. I show my actual trading statements. I'll put that video on a card right now. That's the whole trade. Pay to get in, pay to get out, and a structure that wins whether I'm right or wrong. If you want to see every trade I make with the real statements, the link's below. Win when you're right, win when you're wrong, never gamble. I'll see you in the next one.
Mm-hmm.